Hello to everyone. Today I am here with trade-based money laundering part 2. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. Today we are going to discuss how trade-based money laundering possible. Particularly in the present scenario, it's not an easy task on one side until or unless you will not bring the different stakeholders on one page. Like an extraordinary business relations with the parties involved that include buyer, seller, right holder, broker, etc. There are chances that they are partners or is identifiable groups. Maybe they are working at a network. There are chances that they all of them are from the same family. So in this way, they all of them will be on one page. Both the importer and the exporters can be beneficiary to over and under invoice. Beneficiaries to over invoicing, importer purchase act as a purchaser of the goods, services, or asset. If the purchaser is purchasing on the high price, definitely the purchaser will never purchase on the high price until or unless the purchaser do not have any type of incentive. Normally, the purchaser will not go for such a purchase until there is no tariff imposed on the import or the tariff is less than to its benefit. Thereafter, the importer will think either he should go or not. First of all, importer may be in relation with the exporter. Money may agree to revert as a clean money to the importer. There are chances importer may add as a part of his or her capital equity as partner to the exporter, may pay off any of its obligation in the country of the exporter, like the payment of children's university fee. There are chances that importer want to purchase any type of the prestigious items or any other thing from the importer's country. Importer can benefit by charging inflated price to the supplier by evidencing the document. It's another way that the importer provide the evidence to its supplier that importer has purchased the good or asset on this much price, and thereafter importer will quote the higher price to the supplier with its margin as well. So in this way, the importer is going to enhance its profitability. Also enjoy the high depreciation if it's for its own use. Sometimes the state provides the initial allowance on certain type of asset. So in that case, the importer can also enjoy the higher tax benefit against the imported item. On the other side, exporter may adopt a way to capital flight. Exporters sell goods, services, assets on high price when enjoying the rebate on export. Some countries provide the rebate on certain type of asset. So if the price is on the higher side, the rebate will also go on the higher side. That will give direct benefit to the exporter. Exporters also add clean money to its wealth. When the exporter is receiving the more money against the export, it's mean more the exporter is adding to its wealth. Beneficiaries to under-invoicing. Importer purchases the goods, services, and asset on low price when high tariff is imposed on the goods or asset. In this way, importer is enjoying the benefit. On the other side, exporter is in relation with the importer without having the relation between two parties. It's not possible. Or they have certain inside arrangement that makes such a transaction possible. Maybe add as a part of his or her capital equity as a partner to the importer. It's one of the chances. May pay off his or her any obligation like payment of university fee of the children. Here, the exporter may enjoy this type of benefit. May for the shop of any prestigious items. So this type of benefits exporter can also enjoy from the importer. Exporters sell goods, services on the low price, may hide black money involved as a part of protection cost. So it's an way to hide the black money involved in the business. Exporter difference may revert by the importer and add to exporters wealth. Importer can also transfer the foreign currency to the exporter that will directly add to the wealth of the exporter. Falsification of the quantity and quality of the imported or the export goods. Overshipment, the exporter ship more goods than previously agreed with the importer. That can be underhand arrangement between the parties. On one side, you can say agreed or also as a part of the document. In this case, the exporter ship more shipment or the more goods than what is agreed between both parties and also documented. Undershipment, exporter ship favored goods than the agreed with the importer. That can be fraudulent act. There are chances that the exporter is intentionally ship the less quantity of the goods than the agreed. High quality shipment, exporter ship the superior quality product to hide the tariff. There are chances in case of the quality yarn, the agreed yarn may be of the low quality, but actually the exporter ship the high quality yarn in order to favor the importer with certain benefit to hide the tariff. Low quality shipment, low the exporter ship the inferior quality product maybe as a fraudulent activity and maybe to revert as rejected consignment and replaced by the superior quality product. It's a very real case, but it happens that the importer used to reject the consignment, and when the exporter sent back the rejected consignment, the exporter replaced the goods with any superior quality product that is underhand agreed between the both parties. Multiple invoicing, repeat invoice used for a single job oblique asset, repurchase of the existing asset, refinancing of already financed asset. It's also in practice as a part of trade-based money laundering. Thank you very much. See you again with the upcoming video on the same topic very soon.